Okay, so, when a business giant like Mukesh Ambani decides to shake things up in a market that's been pretty much dominated by two major players for decades,
Yeah,
that's when things get really interesting.
right.
And that's exactly what we're seeing happen right now with the relaunch of Campa Cola in India.
Absolutely.
It's a pretty gutsy move, especially considering that Coke and Pepsi have basically held a monopoly over the Indian soft drink scene for the past 30 years.
Yeah, that's right over 80% control.
80%, yeah. So you've got these two titans basically calling the shots, and then
Yeah, and
Sam Zamboni.
it really is a bit of a David and Goliath situation, I'd say.
Yeah,
Though maybe David's got a bit more firepower than usual in this case, right?
right, exactly. He's come prepared.
But it's important, I think, to remember the history here. We've seen so many local brands try to compete head to head with these global giants. Like we're talking Double Seven, Gold Spot, even the original Campa Cola and Rasna, and they all really struggled to hold their own once Coke and Pepsi got that foothold.
Yeah.
It really shows you just how difficult this market can be to break into.
So I think for our deep dive today, using some really insightful analysis that we've been looking at,
Yeah.
we need to kind of figure out if Campa Cola, backed by this massive Reliance empire, actually has a fighting chance at disrupting this two-player system that's been going strong for so long.
Right.
Can they kind of replicate what they did in the telecom sector?
Yeah.
But this time in the world of fizzy drinks. That's the core question we're going to try and answer today.
Yeah, it's a valid question. I mean,
Right.
when you first hear about a new cola entering this already super crowded market,
Right.
your first thought might be, seriously, another sugary drink.
Right, exactly. Like, do we need another one?
It's totally understandable to be a little skeptical
Right.
about the need for one more option.
So where does Campa Cola fit in with all these drinks already out there?
Well, the sources we've been looking at point to these market gaps, and that's where the potential for real change starts to emerge.
Okay, so let's dive into those gaps.
Okay, so the first one focuses on this idea of per capita consumption and the overall growth of the cola market.
Okay.
Per capita consumption, if you break it down simply, is just how much cola each person drinks per year.
Okay, so let's put that in context. India's cola market is already pretty massive right now. It's at about 37,000 crore rupees.
Yeah, huge market.
And it's expected to keep growing at a steady pace.
Right, about 5% annually.
5%. Yeah, reaching almost 39,000 crore rupees by 2027.
A lot of cola.
A lot of cola.
But here's the interesting thing. Despite this huge market size, the per capita consumption in India is surprisingly low.
Okay.
It was estimated at only 4 to 5 liters per person per year in 2023.
Wow,
Now compare that.
that seems really low.
Yeah, compare that to other major markets like China, which is around 22 liters, or the U.S. with the whopping 154 liters. The difference is pretty startling.
It is. So what you're saying is even though India has a massive population, the average Indian just isn't drinking as much cola as people in other countries.
Exactly. And with India's population continuing to rise and, crucially with disposable incomes also going up across different segments of the population,
Right.
the potential for increased cola consumption is huge.
Yeah.
Even if a small fraction of the population starts drinking just a little bit more, it translates to enormous increases in overall sales volume.
Okay, so even with a large population already, the average Indian isn't drinking that much cola. But as more and more people have more disposable income, they're probably going to start drinking more.
Yeah, and market research suggests that per capita consumption in India has a lot of room to grow before it even comes close to global averages.
Okay, so that means there's this natural expansion of the market happening right now, which creates a window for new players like Campa Cola to come in and really try to establish themselves.
Exactly. It's the perfect time.
So what's the next gap that our sources are talking
All
about?
right, so the second key area is flavor. Now, you might think that with all the brands already out there, like you've got Mirinda 7-Up Mountain Dew Sliced Tropicana Gatorade.
It's a lot.
You've got all these different flavors vying for space on the shelf.
That all the flavor preferences are already being met.
Right.
But actually, if you look at past successes, it suggests there's still room for some innovation.
Yeah, and I think a really great example of this is Sting.
Oh, yeah.
Like, seemingly out of nowhere, it's become so popular.
Yeah, just that one berry flavor.
It's one berry flavor, and our sources indicate that it actually outsells even giants like Mountain Dew and Pepsi in India.
Wow.
So that just shows you the potential for a new flavor to really capture the consumer's imagination. Absolutely. And it's not even just about, bringing in entirely new flavors from other countries.
Right.
Look at Thumbs Up.
Yeah.
It consistently outsells Coke in India. And that really demonstrates a clear preference for a bolder, more localized taste.
Yeah, for sure.
And then you've got that brand built on traditional Indian flavors like shikanji and jeera.
Yeah.
It grew into a 500 crore rupee brand.
That's huge.
Yeah.
500 crore.
These examples really highlight a demand for both variety and local tastes, which maybe the multinational companies haven't fully tapped into.
Right. So Reliance is essentially betting that they can tap into this flavor gap with Campa Cola
Yeah,
by introducing unique and appealing flavors that will resonate with Indian consumers.
absolutely. That seems to be a big part of their strategy.
And hopefully that'll allow them to kind of carve out their own piece of that market share pie.
Exactly.
All right, so what's the next gap?
Okay, so the third crucial gap we found is in pricing. And this is especially important in a market as diverse and price-sensitive as India. The analysis we looked at actually describes India as almost 3 separate countries based on income levels.
Okay, so take me a picture of these 3 Indias.
So India 1 is made up of about 140 million people.
Okay.
With an average income of around 1 lakh rupees per month, this group tends to prefer premium and luxury goods.
Okay, so that's the top tier.
Yeah. Then you've got India 2, which is about 300 million people,
Okay.
earning between 20,000 and 1 lakh rupees per month. And they typically go for mid-range products that offer a balance of quality and value.
Okay.
And then finally, the largest segment by far, India 3, which is a massive 1 billion people,
Wow.
with an average income of about 7,000 rupees per month. And they mainly look for those basic and budget-friendly options.
Okay, so India 3, that's a huge consumer base.
Absolutely.
And it makes sense that price sensitivity would be a big factor for them.
Yeah, for this segment, even small differences in price can really sway their purchasing decisions.
Yeah, for sure.
Like, our source gives some good examples, like choosing a 10 rupee pack of Balaji chips over a 12 rupee pack of Lay's, or going for a 10 rupee local cola instead of a 20 rupee Coca-Cola.
Okay, yeah. Every rupee counts.
Yeah, exactly. These consumers are very, very aware of those price points.
So this is where Campa Cola seems to be playing a really smart game.
Yeah, Campa Cola is priced significantly lower than both Coca-Cola and Pepsi. Like, for example, a 200 milliliter bottle of Campa Cola is selling for around 10 rupees,
Okay.
while a slightly larger 250 milliliter Coke will cost you about 20.
So it's almost half the price.
It's a big saving for the consumer. And during the Durga Puja festival last year, Campa Cola went even further.
Really?
They were offering more volume for the same or even a lower price than their competitors. They were doing 200 milliliters for 10 and a 500 milliliter bottle for 20,
Wow.
while Coke and Pepsi were selling 600 milliliter for around 40.
Okay, so they were really undercutting the competition.
Yeah, and this strategy directly targets that massive India 3 segment, aiming to get a huge volume of sales.
Okay, so it's a classic strategy, aiming for high volume sales in a price-sensitive market.
Exactly.
And if they can get a good chunk of that India 3 segment, the sheer numbers could be enormous.
Exactly. And to illustrate the buying power of this price-sensitive market,
Okay.
look at the footwear industry in India.
Okay.
Many people would assume brands like Adidas, Nike, or Puma are the top sellers.
Yeah, those are the big names everyone knows.
Right. But if you look at revenue from 2023, Bata actually took the lead with 3,478 crore rupees, followed by Puma at 3,274 crore, then Adidas with 2,573 crore, and Nike at 1,448.
Wow, so the more local brands are actually making more money than the big international brands.
Yeah. And there's also Campus Shoes, which is a
Mhm.
big player, although we don't have specific numbers for them.
But you're saying that the more budget-friendly brands are really dominating the market.
Exactly. This shows you that in India, the huge number of price-conscious consumers can push even those brands that are seen as more budget-friendly to the top in terms of overall sales.
Right, so catering to that huge base of price-conscious consumers at the
Yeah.
right price point,
Yeah.
that can be a really successful strategy in India.
It's a winning formula.
But, selling a 10 rupee cola across a country as massive and diverse as India,
Yeah.
that's no small feat.
Not at all.
So that brings us to the really critical aspect of distribution, right?
Absolutely. Distribution is often called the Brahmastra, the ultimate weapon in the FMCG industry.
Yeah, you've got to be able to get your product out there.
You do. And our source actually breaks down the typical distribution chain and the margins involved for a company like PepsiCo.
Okay, so walk us through that.
So you usually have a super stockist who takes about a 2% margin. Then a distributor or a wholesaler takes another 3 to 5%. Then another wholesaler or retailer takes another 3 to 5%. And finally, the retailer sells to the customer with an 8 to 10% margin.
So there are a lot of players involved in getting that bottle from the factory to the customer.
Yeah, it's a multi-layered system.
And that obviously impacts the final cost and the profits for the companies making these drinks.
Absolutely.
So by the time that 20 rupee bottle of Pepsi reaches the customer, a good chunk of that price has already gone to the different people in the distribution network.
That's right.
Then you also have to add in taxes, which can be as high as 40% on soft drinks in India.
Why, yeah?
And then there's the massive marketing budgets needed to keep the brand visible and make sure people want to buy it.
Yeah.
Our source mentions that PepsiCo's marketing spending in FY23 was a whopping 694 crore rupees.
Yeah, it's a huge amount. 11% of their total revenue.
11%. That just shows how expensive it is for any company to compete and maintain a strong presence in this market.
Yeah, it's a tough game.
So that's a huge financial hurdle for any new brand trying to enter this market.
For sure.
So how is Reliance planning to tackle this distribution challenge with Campa Cola?
Well, this is where Reliance's existing infrastructure gives them a big advantage.
Okay.
They've already got this massive retail and distribution network with over 18,000 stores across India through Reliance Retail.
That's huge.
Yeah. So Campa Cola can basically piggyback on this already established system,
Okay.
making their distribution much more efficient and cost-effective right from the start.
So they don't have to spend years and tons of money building a distribution network from scratch.
They don't. They're way ahead of the game.
That's a huge advantage.
Yeah. And on top of that, reports suggest that Reliance Retail is offering retailers higher margins, about 6 to 8%, compared to what competitors usually offer.
Okay, so they're giving the retailers more of a cut.
Exactly. And that incentivizes those local shopkeepers to not only stock Campa Cola, but to actually push it to their customers.
Right, because they're making more money that way.
Exactly.
That's a really smart move because if you can offer better returns to the people who are directly interacting with the customers,
Yeah.
they're much more likely to give your product prime shelf space and recommend it.
Absolutely.
So it's not just about the existing network, it's also about incentivizing the retailers
Right.
to really get behind your product.
Absolutely.
And Reliance's distribution power doesn't stop there. They've got these extensive shipping and logistics capabilities.
That's right.
So they can reach even remote and underserved parts of India.
Yeah. Areas where other brands might have trouble getting their products to.
So they're really covering the entire country.
Yeah, they're leaving no stone unturned.
And on top of all that, they're putting Campa Cola in all sorts of new and interesting places.
Yeah, like fuel stations,
Fuel stations.
local events,
Local events.
cinema complexes.
Yeah.
You know, they're really mirroring those early distribution strategies that worked so well for Coke and Pepsi when they were first establishing themselves.
Okay, so it sounds like they're really hitting the ground running when it comes to getting Campa Cola into the hands of consumers.
Yeah, they're going all out.
But with such low prices and potentially higher margins for retailers,
Yeah.
profitability in these early stages must be a big question mark for Reliance, right?
You're right to bring that up. The analysis we've seen suggests that making a significant profit in the first year or two is pretty unlikely.
Okay.
You've got the combination of low prices for consumers, potentially higher margins for retailers, and then those big upfront investments,
Right.
like the reported 220 crore rupee sponsorship of the IPL for Campa Cola.
The IPL, that's huge.
Yeah.
So they're really putting a lot of money into this.
They are. All those factors are probably going to outweigh any immediate profits.
So it sounds like it's more of a long-term strategic play for Reliance.
Exactly. They're not focused on quick wins.
Okay.
Their success in the long run depends on reaching massive scale by capturing a good chunk of that enormous India 3 market.
Right, so they're playing the long game.
They are. And to really understand the financial power that Reliance is bringing to this battle.
Yeah.
Consider this. In the fiscal year 2024, Reliance Retail's profit alone was a mind-blowing 79,000 crore rupees.
Okay.
Now compare that to the total revenues for Coca-Cola India and PepsiCo India in the same year, which were 4,713 crore and 120 crore respectively.
Wait, hold on. Reliance Retail's profit was 79,000 crore rupees.
Yeah.
That's insane compared to the total sales of their biggest competitors in the Indian cola market.
It is a huge difference. The source even points out that theoretically, Reliance could just buy both Coca-Cola India and PepsiCo India multiple times over using just their yearly profits.
Wow, so they've got deep pockets.
They do, and this massive financial strength gives them a huge advantage.
Right?
They can play the long game. They can afford to take some initial losses while they're building market share.
So they're not messing around. They're really committed to making this work.
They are.
But even with all these advantages, there must be some potential roadblocks for Campa Cola as they try to disrupt this well-established duopoly.
Oh, yeah, for sure. Even with all of Reliance's strengths, they've got some serious challenges to overcome.
Right.
One of the biggest is the strong brand loyalty that Indians have for Coke and Pepsi. These brands have been around for decades, building up their image and winning over customers.
Right. They've got that nostalgia factor.
Yeah, exactly. And changing those long-standing habits, that's not going to be easy for Campa Cola.
People just tend to stick with what they know, especially when it comes to something like a soft drink.
Yeah, it's a tough habit to break.
So what other obstacles could they face?
Well, it's a good chance that Coke and Pepsi could start price wars.
Oh, yeah, if they start feeling the pressure.
Exactly. If Campa Cola starts taking market share by undercutting prices, the big players could easily retaliate with their own discounts,
Right.
which would squeeze Campa Cola's already tight margins.
Yeah, so that could turn into a real battle of attrition where only the company with the deepest pockets survives.
It could get very intense very quickly.
And then there's the whole issue of managing their supply chain.
Oh, yeah, that's a big one.
I mean, Reliance has this huge distribution network, but making sure everything runs smoothly,
Right.
getting the product produced, warehoused, transported, and delivered on time across such a vast and diverse country.
Yeah.
For a brand new product line, that's got to be incredibly complex.
It's a logistical nightmare.
And then there's the whole question of taste.
Yeah.
They can be innovative with flavors, but they need to make sure they're creating flavors that appeal to a wide range of Indian consumers.
Absolutely. They've got to hit those taste buds.
If they want to see widespread and lasting success.
Yeah. It's not enough to just be different. You've got to be delicious.
Exactly.
So to sum it up,
Okay.
Reliance is coming in strong. With Campa Cola, they've got a great pricing strategy targeting a huge market. They've got this amazing distribution network, and they've got the financial muscle to really make a go of it. But there are some serious challenges ahead. They're going to have to work hard to overcome those deep-seated brand loyalties. They're going to have to be ready for potential price wars. They need to make sure their supply chain runs like clockwork. And most importantly, they need to create flavors that capture the hearts and taste buds of the Indian masses.
Right. So it's going to be a fascinating battle to watch.
Absolutely.
So what does this all mean for you, the listener?
Right.
Well, it's a real-life example of market disruption in action. It shows the power of finding and exploiting those gaps in the market.
Yeah, those little cracks in the armor.
Exactly.
Yeah.
Whether those gaps are in consumption patterns, flavor preferences, price sensitivity.
It's about finding the unmet needs.
Exactly. And it also shows how a company with deep pockets and a strong existing infrastructure can use those advantages to take on even the biggest, most established players in a market.
It's a real David and Goliath story.
Yeah, but this David has come prepared.
Yeah, he's got a slingshot and a whole lot more.
So this deep dive into Campa Cola, it brings up a really interesting question.
What's that?
Given Reliance's massive and diverse business empire and their history of shaking things up in other sectors,
Yeah, like what they did with Geo.
what other seemingly unbreakable market monopolies might be vulnerable to a similar challenge in the future?
It really makes you think.
It does. It makes you think about the potential that exists when you truly understand the gaps in a market and maybe even more importantly, the changing behaviors and unmet needs of consumers.
The power of understanding the consumer.
The power of understanding the consumer, that's where the real opportunities lie.
Absolutely.
And on that note, we'll wrap up this deep dive into the world of Campa Cola.
Fascinating stuff.
Fascinating stuff indeed.
Yeah.
We'll see you next time for another deep dive into a compelling business story.
Sounds good.
All right, until then, thanks for listening.